Are you an NFT seller in Pennsylvania? If so, you may be surprised to learn that NFTs that are sold in Pennsylvania have NFT sales tax exposure, and you should be collecting and remitting this. The problem is almost no one is collecting and remitting sales taxes in Pennsylvania. Pennsylvania's recently added NFTs to their list of taxable items in their sales tax matrix, and we're going to go over all the details related to that today, so you are not surprised by the tax man and left with unexpected tax liabilities and hits to your reputation. So what is sales tax? Sales tax is a tax that's levied at the point of sale, and it's usually collected by the seller, and it's quoted as a percentage of the sales price. The sales tax rate can vary state by state and jurisdiction to jurisdiction. The sales tax rate in Pennsylvania is 6%. Now, when do sales taxes apply to NFT sales in the state of Pennsylvania? Now, the guidance that we've received from Pennsylvania has been limited up to this point. Pennsylvania listed NFTs as taxable for sales tax purposes when they added NFTs to their taxability matrix under digital services and products. Now, outside of that, we haven't really received additional guidance from Pennsylvania, particularly related to any exemptions that may apply to specific NFTs. Now, in other states, we've seen additional guidance where the NFTs will be taxed based off of the underlying product associated with the NFT. So we may see future guidance from Pennsylvania related to this, possibly with some exemptions. But right now, all we know with the given guidance from Pennsylvania is that NFTs are taxable, and if you're selling an NFT, they most likely are going to have a sales tax exposure associated with it. Now, sourcing the sale of your NFT for sales tax purposes is key for any state, and Pennsylvania is no exception. All sourcing the sale means is, for tax purposes, determining which tax jurisdiction and which location the sale took place. Now, this can vary from state to state. In Pennsylvania, they provided guidance related to how NFT sales should be sourced, and they've stated that the customer's address should be used as a proxy for sourcing the sale. So what this means is that when you're selling an NFT, you should be collecting your customer's address, and the sales tax applicability is going to be based off of that customer's address. If they live within Pennsylvania, they're going to be paying a sales tax rate associated with Pennsylvania in their specific location. And if they live in a different state, their tax jurisdiction will be related to that state, and they will have sales tax exposure in that given state as applicable. So obviously the key here is that you need to be able to collect your customer's address in real time at the point of sale, and then calculate the appropriate sales tax rate associated with this transaction at the point of sale. We've automated this process for NFT sellers with our software at Digital Impost. So it's key to be collecting the customer's information. Now, in Pennsylvania, they haven't provided any guidance for NFT sellers who are in a position where they are not collecting the customer's information, or maybe they've had past sales and they haven't collected that customer's information. Pennsylvania hasn't really provided explicit guidance related to this, so we're in a wait and see pattern for this particular scenario. Now, in other states such as Washington, we have seen guidance given for circumstances where the address was not collected at the point of sale. And in a state like Washington, the hierarchy of sourcing then falls to the seller's address. So really, ultimately, there's not going to be any way to get out of collecting sales taxes. It's always going to be better to collect your customer's address so we can get an accurate sales tax rate and apply this tax at the point of sale to make sure that we're limiting any unwanted tax surprises. So do NFT marketplaces also have sales tax collection and remittance responsibilities in Pennsylvania? The answer is most likely yes. If a marketplace is operating in Pennsylvania, meaning that if it has any people that are purchasing NFTs on their platform that are located in Pennsylvania, they may have an economic nexus. All an economic nexus means is that if a marketplace is completing sales in any given year that exceeds a threshold of $100,000, then they have an economic nexus and they have a sales tax collection and remittance responsibility in Pennsylvania. So if you're a marketplace that's facilitating the sales of NFTs and you meet this economic nexus threshold, you should be properly collecting and remitting sales taxes for the NFT sales that take place on your platform. So if you're an NFT seller in Pennsylvania, you may be wondering, so do I have to collect and remit sales taxes on my NFT sales in Pennsylvania? And one factor that is going to be crucial in deciding this is whether or not you have a nexus in Pennsylvania. You can have a nexus as a seller in Pennsylvania in two main ways. The first way is having a physical nexus, which means that you're going to have some type of physical presence within the state. This can be an office, a warehouse, employees within the state, but you're going to have some sort of physical presence within the state. The second type of nexus is called an economic nexus. Now, this economic nexus can apply whether or not you have a physical nexus within Pennsylvania. So sellers located in any state throughout the United States can actually still have a sales tax nexus within Pennsylvania. So in this case, if you're an NFT seller and you're selling over $100,000 in any given year worth of NFTs to end users that are located within Pennsylvania, then you're going to have an economic nexus in Pennsylvania. And as a result of having a nexus, you should appropriately collect and remit sales taxes on those sales in the state of Pennsylvania. So what are the potential risks and consequences if you fail to properly collect and remit sales taxes in Pennsylvania? Firstly, Pennsylvania has stated that the sales tax guidance related to NFTs is interpretations of existing laws. And so this means that they can go and retroactively enforce these laws on prior NFT sales. That means that if you've sold an NFT within the previous 6 years, Pennsylvania could potentially come back and retroactively enforce the sales tax collection and remittance related to those previous sales. So there's the risk to any seller that has a nexus in Pennsylvania of retroactive tax enforcement, and as a result, unexpected tax liabilities that are going to impact your company's cash flow. Secondly, there is the consideration of your company's reputation as well as the NFT industry's wide reputation. If it starts to become publicized in headlines, and the headlines are slowly starting to trickle in that NFTs have sales tax applicable to it and your company or the industry as a whole is not collecting sales taxes, this is not going to reflect well, and it's not going to help your company's image. It's not going to help the NFT industry's image. So the first risk is unexpected tax liabilities. The second risk can be bad publicity that can hurt your company or hurt the industry. The third risk is actually to your customers. So states like Pennsylvania have stated that if sales tax isn't collected at the point of sale, then the customers that were purchasing the NFTs should be paying use tax on the purchases of those NFTs. And all use tax goes hand in hand with sales tax. A use tax is paid when sales tax should have been collected on the sale and it's not collected. The use tax gets paid by the customer when they're filing their returns. So in cases where you aren't appropriately collecting and remitting sales taxes at the point of sale, you may put your customer in a position where now they have a compliance requirement to report this to the state of Pennsylvania. And if they fail to do so, they can have tax issues that really just originally stem from this whole issue of you not appropriately collecting and remitting the sale taxes at the point of sale. So there are several risks to not properly collecting and remitting sales taxes in Pennsylvania. This includes a risk to your bottom line, a risk to your reputation, as well as a risk to your customers. Now, there are significant challenges in collecting and remitting NFT sales taxes for companies that do want to get in compliance with state sales tax regulations. These issues, the main two issues really are collecting your customer's address appropriately and then calculating and collecting the appropriate sales tax rate in real time at the point of sale in the native cryptocurrency. So the first step is we need to calculate the correct tax rate to apply to the sale when your customer is at your website or in the marketplace completing the sale. This means that you're going to need to collect their full address in order to determine what their tax region is and what state and local sales tax rates apply to them. Obviously, this can be a challenge within the NFT industry due to the overall nature of the industry and the fact that most of the NFT purchases are done with non-custodial wallets that don't have an address associated with it, and this isn't information that historically has been collected from customers at the point of sale. In order to get into compliance, you're going to need to start collecting this information from your customers. If you want to have a perfect rooftop accurate sales tax rate that gives us the most accurate sales tax rate possible, we need to collect your customer's full address. At minimum, you're going to need to collect your customer's zip code. Now, the problem with just collecting the zip code is that if we only collect the zip code, the tax rate in certain scenarios is not going to be fully accurate because the zip code can have a different regions for the postal zip codes compared to tax regions. And some locations, if you're just going off of the zip code, we're not going to get the local sales tax rates correct because they're just not based off of zip codes. So the best practice is to get a fully rooftop accurate sales tax rate is to collect the full address from your customer. Once we have the full address from your customer, we can calculate an accurate sales tax rate. And the next challenge is to make sure that we collect this appropriately from your customer. So this needs to be done in the native cryptocurrency that you're selling the NFT in. So if you're selling an NFT in Ethereum and that NFT is being sold for 1 Ethereum, and there's a 10% sales tax rate that we've calculated based off of your customer's address, then at that point of purchase of that NFT, we need to charge not 1 Ethereum, but we need to charge 1.10 Ethereum. So we collect the full sale amount as well as the full sales tax amount on that sale. So this needs to be, again, calculated in native cryptocurrency that you're selling. These are the two main challenges to properly collecting and calculating the sales tax when you're at the point of sale with your customer. There are additional challenges in terms of getting the correct information for tax reporting purposes, but the two upfront challenges are going to be getting your customer's information and then calculating the appropriate sales tax rate in real time in the native cryptocurrencies. Now, our software, Digital Impost, has automated this entire process for NFT sellers, from collecting the customer's information to calculating the appropriate sales tax rate to collecting that sales tax rate in the native cryptocurrency at checkout. And then on the back end, we're able to provide the appropriate information for tax reporting purposes and actually automate those tax filings across all state tax jurisdictions. If you want to avoid the risk associated with non-compliance with NFT sales taxes, such as unexpected tax liabilities, angry customers, damages to your reputation, we have an automated solution for this at Digital Impost. No more manually calculating your sales tax rates for every sale and manually filing in the various tax jurisdictions that you have sales tax liabilities in. Digital Impost automates the entire sales tax process for NFT sellers, from collecting your customer's information to calculating the appropriate and accurate sales tax rates to collecting your customers' sales taxes in real time at the point of sale in native cryptocurrencies to automating the tax reporting and tax filing information with the appropriate tax jurisdictions. Digital Impost has you covered with an end-to-end NFT sales tax solution that was built specifically for the digital asset industry by digital asset CPAs.